Fintech Chatter, presented by Tier 1 People, leaders in Fintech executive search. Welcome to episode 127 of Fintech Chatter, the podcast where I connect with Fintech leaders for a bit of a chat. I'm your host, Dexter Cousins, and today's guest is Rebecca James, CEO of ASX-listed Humm Group. Rebecca has transformed Humm Group from a traditional financial services business to a fintech with the emphasis on fin. I chat to Rebecca about the Humm Group strategy moving forward, their new board, including friend of the show Anthony Thomson, and the new opportunities the current macro environment is presenting to lending businesses. Rebecca also talks about her journey as an ASX-listed CEO and the challenges she's faced in transforming the Humm Group business. But before we chat to Rebecca, just a reminder that if you're new to the podcast, welcome and make sure to follow us and leave a review. It really does help us in spreading the good word about Aussie fintechs. And if you're coming back, thanks so much for your support. Rebecca, welcome to Fintech Chatter.
Thank you for having me.
I've been wanting to have you on this show for about 2 years now, so it's fantastic to finally have you on.
Thank you.
So before we kind of have a chat, I guess for the benefit of our listeners, can you tell us a little bit more about Humm Group and the big problem that you solve?
Yeah, at its very core, what we solve for both consumers and small to medium businesses is affordability. We provide payment plans for large ticket items, whether that's a forklift for a small business owner or solar panels on a home from a consumer perspective. And, we provide easy, interest-free installment plans that help at the end of the day to make those purchases more affordable and easier on the cash flow of a business or the household budget.
Now, we're obviously entering a period in the economic cycle where that's becoming increasingly more important. What have been, I guess, from the things that you're seeing right now as to how that cycle's shifting, because we've seen in this last decade the rise of interest-free kind of credit solutions, which have been enabled predominantly by a very low interest rate. Now we're in a very different period. How have you seen that kind of impact and shift the Humm business?
Yeah, look, I think one of the benefits that we have as an organisation is we have a long history and a heritage. We've been running as a business for over 30 years. So we've operated in varying macroeconomic environments, both low interest rate environments as well as high interest rate environments. And so we've got a playbook in terms of, what we do. And we have a range of products to help both merchants as well as consumers through those times. We've got, a really strong operating cadence where we're very aware of the rising cost of funds and what that means from a pricing perspective, whether that's in merchant services fees, interest rates, terms that we may play with, consumer fees. And so we have a number of items at our kind of disposal or in our arsenal to be able to kind of thrive during these times. So on the one hand, yes, you're absolutely right. There's a rising cost of funds environment, and you've got to ensure that your products and your approach to market are considering, just like any other provider or service or manufacturing, if the costs of your inputs kind of go up, then the price of your goods needs to increase along with it. And so we're not immune from any other business with regards to that. I think the other piece, though, which is interesting, is that in a rising interest rate environment, and particularly in areas of higher inflation, both consumers and small businesses need to lean on products like ours that help with affordability, that help smooth out household budgets or cash flows from lumpy bits. And because the products that we provide on the whole are interest-free and fixed term, they're very equitable from a consumer and for a small business perspective. And so it's also a service that is relied upon more in this type of economic environment as well.
So I'll go back to the intro that I gave, and one of the real, key reasons that I was so keen to get you on the podcast is, having been around the industry for a couple of decades now, and in Australia for 18 years, I knew kind of the origins of the Humm business and knew it as Flexi Group. And then when you came in, the work that you did around kind of reinventing the business, I just really admired, and kind of how you tackled, I guess, the challenges that were coming from the buy now, pay later space, and, really diversifying that business. Would you mind kind of sharing with us a little bit more about the legacy of Humm and kind of, the role that you played coming in as CEO?
Yeah, look, I've run my background. I started out in professional services, and I was managing director of Australia's largest independent customer experience consultancy, and I had two partners in that business. It was called CX Lavender after the founder of the business, a great guy, Will Lavender. And so that was very much my grounding from a career perspective, was running that business and being very, very close. When you are running a small to medium-sized business, it grew to about 180 people, and we had offices in Sydney, Auckland, Wellington, and Melbourne. So it was quite a sizable business. And so that was really my first experience from a leadership perspective, P&L accountability, and also, the type of culture that you want to establish as a business and create. But this was certainly my first chief executive role of an ASX-listed business. And the approach, I think, when you're coming into any business is really to spend time understanding what actually exists within the DNA and the very fabric of this business. And Humm Group, Flexi Group as it was then known, has some real key competitive advantages in a number of different areas. The first was in credit decisioning, and its strength lies in credit decisioning of bigger ticket items. And so our average purchase for consumers is around $4,000. For small businesses, it's around $100,000. Currently, our credit losses are at a historic low for the business. We've got a very strong team and capability in those areas. And so that's the first thing. It is a business that its DNA is very focused on larger ticket purchases because of its credit capability in that space. And so, if even though the competition was very focused on, small ticket e-com transactions, which of course are important, it's crucial that you don't get wrapped up in the fervor of what everybody else is doing and neglect actually what is one of the big foundational strengths that we have as a business. And that's very much one of them. The other key strength, which is absolutely crucial, particularly in this macroeconomic environment, is our funding capability. Because the business has been going for 30 years, as I mentioned before, it's incredibly well funded. We've got strong warehouse and securitization capability that supports every single one of our products. And so in times like this where it can be challenging, particularly with equity markets, we are very well funded to be able to continue to fuel our growth, under our own steam, which is a privileged position to be in. And so both of those strengths, I was ensure that we wanted to leverage those strengths. The things that we needed to address, or that were opportunities for the business and important for us to address, is I do think we've seen a shift, particularly in retail point of sale finance, away from kind of retailer or merchant push of finance to consumers pulling. They have these products, they're aware of the brand of the product that they have. These finance products themselves can distribute offers and special deals and encouragement from a loyalty perspective to shop at certain merchants over others. And so that was really the key change that I could see in the market, and something that the business was yet to address. And so really the role was very much then in digital customer experience, making our products easier to access. We didn't have any apps for our products 3 or 4 years ago. Now that's our main point of distribution, like most of our competitors. The ability, though, to quickly decision those larger ticket items was fantastic. So we just needed to leverage that in a far more digital way. And we needed to increase and improve our brand awareness and put our product, which largely on the consumer side of the business sits within a mobile phone, in the hands of more Australians, and drive those consumers into merchants that had partnered with us.
Yeah. How difficult was it to, I guess, execute on that strategy, whilst on the other side of your role is managing kind of, as a listed company, managing investors, managing the expectations of the market? And at the time that you're doing this, you've got Afterpay going on an absolute tear. You've got Zip going on an absolute tear. They're kind of being valued as tech businesses rather than lending businesses. And here's you kind of, trying to focus on the fundamentals of the Humm business and its strengths. And then, some people are labeling you as a buy now, pay later and trying to put you in the tech bucket. How difficult was it to kind of manage those two kind of, almost polar opposite expectations?
I think what's really important in business is you do need to stick and be sure of some business fundamentals. And because of the experience, and I think I've got this experience predominantly, I think, because I did run a small business, and when you're running a small business, although ours was nearly 200 people, you're very focused on, at the end of the day, what are the unit economic of the services that you're providing? What's your cash flow position? And so I think first and foremost is, in a way, I feel like from a leadership perspective, I've led a business through my own mini .com boom and bust kind of period. And it's very important, I think, emotionally, that you don't get caught up in the fervour of that, and you focus on the fundamentals of running a profitable business. And I feel we have absolutely been able to do that. So I think that's the first thing, is don't lose sight of the fundamentals of being in business. At a base, at a transaction level, you need to be supremely confident that at every single transaction is going to deliver a return to shareholders fundamentally. And so never kind of lost sight of that throughout that period of time. I think throw a pandemic into the mix though as well. I think that degree of complexity, it has been a challenging period of time. If you're focused on large ticket purchases and items, they generally take place in an in-store environment. We've had a lot of store closures in our key markets of Australia and New Zealand throughout that period of time. One of the largest verticals that we support in the consumer area of our business is travel. So that's also had an impact on the business. But one of the positives to come out of this And one of the strengths of Humm is that it is a diversified business. And so through that time, our commercial business, or our offering to small businesses, has seen incredible growth. I think the support that the Australian government gave to some small businesses, the stimulus that they put into infrastructure projects, continue to drive demand. We very much focus on, equipment finance, servicing, large-scale engineering, infrastructure, logistics areas. And so that's one of the great things about this business and its strength is its level of diversification. And so even though, no travel for 2 years, absolutely impacted the growth that we saw in the consumer business, the commercial business was a net beneficiary of that. And so we remained profitable, well-funded throughout that period of time. And that's something that, our team are very proud of.
Awesome. Now, the Australian media will never let a good news story get in the way of a bit of sensationalism. And you have been in the news this year with the proposed takeover by Latitude, which in the end didn't happen. It was kind of portrayed fairly negatively, but from where I sat, it kind of seemed to be inevitable that the outcome that happened would be the outcome that would happen, given what's happened in the markets this year. But would you like to kind of share your kind of side of the story and what really kind of went on there?
Look, I think strategically, the first comment that I'd make around it, strategically, with the number of non-bank consumer finance companies in Australia and also servicing New Zealand for the market size that we have, consolidation in this sector is inevitable, particularly with the number of IPOs and things that we saw over the last 2 years. There are a number of providers, whether it's in retail point of sale finance or personal lending, that are on the exchange. And so I think, moving forward, we're going to see a lot of consolidation occurring in the sector, I believe, within the next, 6 to 12 months. Particularly as access to funding, I think, tightens. And so when you have two organisations that are highly synergistic, which Humm and Latitude are, both are profitable, you can see that strategically, there's a very solid argument for consolidation. I think, largely it was the victim of timing, to be honest with you. It was largely a scrip deal, and there was a lot of volatility that occurred in the market right before the shareholder vote. And the respective share prices of both organisations were materially lower than what they were when the deal struck back in January. And so, despite all of the sensationalism that that you've labelled it occurring in the media, at the end of the day, really, I put it down to that market volatility that was occurring at the time.
Yeah. Now, what I consider to be sensational news is something that was announced last week, which kind of flew under the radar, which was your new board directors that were appointed.
Yeah, we're thrilled, Dexter. We have a really, I think, diverse, in thought, highly capable board with Andrew Abercrombie, who's Humm's largest shareholder. He founded the business in his chair, and then 4 strong, completely independent directors.
Fantastic. And are you able to name who you've got on board now?
Yes. So I think who joined relatively quickly after the transaction was declared not to proceed was Stuart Grimshaw, who ex-Bank of Queensland CEO and a lot of financial services experience at CBA, but also internationally in the US. Teresa Fleming, who is currently also the chair of our Irish business, and is, we've worked very closely with her in growing that business over the last 5 years that she's been involved with the business. And then the two recent appointments of Robert Hines, again, great background and experience. Also, he was CFO of Bank of Queensland. Ironically, not at the same time that Stuart was CEO, so no overlap there, but both have worked at that organisation. And then Anthony Thomson, who has just a wealth of experience, has founded 3 banks in his time, 2 in the UK, was chair of 86-400 here in Australia as well, and successfully sold all of those banks as well. So really strong board, yeah.
So, and with the board in place now and kind of certainty around, a lot more certainty around where the business stands, what do you see as the future for Humm Group, and what's got you excited right now?
Yeah, look, I see, particularly in this macroeconomic environment that we're in, I used the word privileged before, and I do feel we're in a very privileged position. You would have seen at our full year results, we have excellent funding capability because of the growth in our commercial business as well. We added 2 additional warehouses, so there's another $700 million of funding that was added, capability that was added to the business just prior to the full year results. We've got cash on balance sheet, and so really, I feel in this time where access to markets, can be challenging, we have enough fuel to grow the business, and there are a number of our competitors who are in a more challenging position. So I see that as a strength. I also think, particularly if I focus on the Australian and New Zealand economies, we are in somewhat of a sweet spot, I believe, when it comes into the lines of business that we're in. Stable employment levels in both markets, and even economists are predicting, even for the next 12 to 18 months, relative stability in those markets. But with rising costs, consumers and small businesses will be looking for ways to make larger purchases more affordable, and we've got great solutions to those problems that enable both of those audience to be able to purchase on their terms. And so I think very stable business from a funding perspective, and opportunities that are starting to, I feel, open up more with the demand, the consumer and the small business demand for our products increasing, and we're certainly seeing that in the first quarter. We've certainly seen that in the first quarter of our operations. I think also we're really looking through this environment to diversify the number of industries that we will support with our products. The last 18 months has seen a really large growth in us providing finance for more expensive health services, so dentistry, audiology, veterinary care. That over an 18-month period has now become our biggest vertical, which is great. And so, having successfully done that diversification, we'll look at other points of diversification in terms of where we see a need for our products in this changing environment. And then also, I think with things like open banking very well progressed, I'm also looking forward to in the future, in the next 12 to 18 months, just the ways that we can continue to enhance the customer experience. How can we speed up our decision making? How can we be more accurate in our decision making to the benefit of our end customers? and how we can support them even further. And so I think that side of it, from the data that's becoming available, it's a very, very exciting time to be working in finance.
Now, we've talked a lot about the business side of Humm Group, but to kind of, I guess, successfully undergo the kind of transformation that you've led, Rebecca, you have to have the right people in place as well. From a kind of cultural perspective, what have been the things that you've kind of tried to instill into the Humm Group culture to be able to do this successfully?
Yeah, look, I like to think that I like to make strategic decision making as accessible as possible. I have a philosophy that people won't buy into a strategic shift or a transformation journey unless they've had the opportunity to weigh into that strategy. Our blended leadership team, which is made up of about 50 people, heavily influence in the way that we go about thinking about our strategic priorities on a, whether that be 12-month or 3-year horizon. We facilitate a number of strategic sprints where they're heavily involved in that process. And so when you're going through any period of extensive change, I think that process is really important. And so culturally, there's a lot of ownership internally around the strategy that we have as a business. And it also makes, because of the environment, we've made a decision to close a number of products that were loved by consumers and that were only recently developed by our team. And so making the decisions, to close those offerings is difficult, right? But if you've got the leaders in the business on the journey, giving them the tools to actually come up with that answer themselves, it makes that decision a lot easier, but also they become the ambassadors and the advocates for those decisions right throughout the business. And that's what we've been able to achieve.
Having experienced that myself, I know how liberating it is when you kind of come to that realization that actually, this is not the right thing to do. And although I've invested a lot of time and energy into it, it's now time to let go. The other side to that is to how do you then refocus people to then move to the next thing and take on the next challenge. And I say this because over the last decade or 12 years, certainly since the GFC, we've seen a lot of corporates be in this continual kind of transformation mode where you now speak to people who've been in those businesses 8, 9, 10 years who are just worn out. And it's like they hear about another transformation and their body just drops. And it's like, I don't know if I've got the energy for this. How do you keep people energized?
Yeah, look, I think for us, I believe, and it's largely because of technology, that businesses are going to go through a continual rate of change, and you need that in order to stay relevant. And so I don't think you can shy away from that. But I think big T transformations take a lot out of people, and I feel that we've done a large part of that. And we're entering into a period now, I feel, of stability.
Yeah.
Particularly post the pandemic, particularly post, the decision to keep the business unified and together. And so that's very much now, the focus for us is, growth in our core products, stabilizing or reducing costs that are within the organization, improving profitability. And I also think being in a position to be able to take advantage of opportunities which are going to arise in the next 6 to 12 months. And undoubtedly, I believe that they will.
Yeah. For those who've been through the economic cycles before, and look, this is my third in recruitment, having done .com crash, GFC, and now, what we're going through. You see there are different types of people required, different phases. And I agree, very much this is not just the consolidation phase, but for businesses like Humm, those who I think have been, resisted the urge to kind of go after the flashy things and just focus on fundamentals and keep profitable. This feels to me like this is their time. They've kind of just been patient, waited and waited, and now the opportunities are starting to show themselves where there's a lot more value in potential acquisitions, as well as, I think from a talent perspective, I love to use the kind of the metaphor that stars shine in the dark. And I think there's this is now the period where those people who've got those skills, the skills that you talked about actually when you were at Lavender around what I'd say are just business 101s, P&L management, kind of being able to drive revenue whilst keeping costs down. What do you think is kind of from a cultural perspective now, a talent perspective? Has your kind of view on the types of people that you now bring into Humm Group, has that shifted? And do you require different people for this next phase of the journey? Or do you think there's this kind of skills there that you can take people on that journey and then help them develop?
I think I would characterize, and I'm going to use this. I had a great conversation with a potential candidate the other day, and they actually asked me a question straight out the gate, which was, are you after a fintech person or a tech fin person?
Yeah.
And I'd never heard it kind of expressed quite like that. But I loved it actually, because it very much, is at the heart, I think, of what you're trying to describe. Humm has always been a fin technology. It's a finance company that's enabled by technology. And so, the business fundamentals for us that continue absolutely within the business are around portfolio management, NIM, funding capability, credit loss, fraud capability within the business. And so I feel that we've got very real strengths around that. And I think the transformation that we've had over the last couple of years is ensuring that we're injecting a healthy dose of customer experience and into all of that, so that we can make the financing of these bigger ticket items as frictionless as we possibly can. And so I think it's really important that you have a combination of those skills within the business. You can't have one without the other in a financial services in a financial services business. And I think we're seeing more and more capability in people who are able to sit comfortably in both of those camps, which I think is great, is absolutely great to see. But I do describe ourselves, we are a finance company. That is the service that we provide, and we have capability in all of the rigors that are required in being able to do that.
Now, an inspiring leader like yourself is great for attracting talent to the business. The other challenge is then keeping them engaged and happy and developing in the business. How have you gone about doing that? Because I think that was one of the things that immediately struck me when you took on the role, was that, and this isn't to be disrespectful to the people there previously, but there was a sense that you were attracting the kinds of people that perhaps the business hadn't attracted in the past. How have you managed to kind of retain them and go on this journey as well?
Yeah, look, gosh, we've I think retaining people and retaining great people has been so challenging over the last 2 years. And we work hard at it, would be the first thing that I would say. And I think the people that we have within the business, and obviously, remuneration is important for everybody, recognition is important for everybody, but also I think what drives the core contingent at Humm is they want new experiences, and they want to expand on their capability. And so we've had a real focus as a business around internal development, internal promotions. We've a lot of people that worked in our customer service centres or in our operation centres have been upskilled into a variety of other areas of the business. And because of the knowledge that they have of the business and the passion that they have of the business has really benefited as a result. And I also think being very clear around the vision, the purpose that we have as an organization, and people can be very tethered to that. I think, yes, we're providing finance. Yes, we're providing finance for goods and services, but those goods and services are either, more of a necessity versus a want, or in the case of SMEs, they need this equipment in order to continue to grow their business. It's meaningful, the finance that we're providing to both of those audiences. And I think, in a market where there's there can be a lot of frivolity, I guess, or frivolous kind of consumption and consumerism, I think the team feel good in terms of what we're doing and the audiences that we're helping ultimately at the end of the day.
Yeah, and you're speaking to somebody who is now credit card free because of the innovation that we've seen around buy now, pay later, and installment payments. Where and I've heard multiple other stories of people in my network who have not only credit card free, but don't even need to use installment payments anymore because they're not paying $1,000 a month in interest on a credit card. And I think these are the stories that never kind of hit the media, never get talked about. Credit is essential for us to function in the world that we live in. And I think this is where we're kind of now at a really interesting juncture that I think the conditions that we've talked about and the change in the economic cycle now makes, I think it's a really good opportunity for businesses like Humm Group to really show their value to their customers.
Yeah, I couldn't agree with you more, Dexter. I think we are entering in a time where cost of living pressures are real. The cost of equipment for small businesses is increasing. And so, I think there is always a time and place where people are going to need access to credit, whether that's through emergencies, veterinary treatments for animals, braces for kids, root canal, those types of things, which can be very lumpy for the household budget. But also in the areas of, if people are looking at utility bills now, solar panels on the roof, green energy, how they can reduce, the operating costs of the household. And these products are fixed term, when you're going to have to pay off. You don't think that you're going to get into this revolving level of debt. And I think the story that goes along with that and a lot of the positives is lost from an education perspective in the media.
Now, we've talked a lot about this kind of shifting economic cycle, and rather than being all doom and gloom, as we've talked about, it does present opportunities as well. And I thought it'd be kind of nice to hear from you what's got you excited about fintech right now, and whether there's any areas of the industry right now that you're really keeping an eye on.
Yeah, so I think we've gone through an immense period of innovation. There's a lot of organizations that have been birthed over the last 2 to 3 years that are providing fantastic services and a great customer experience. And they are unfortunately going to be challenged in order to, if they're not currently profitable, if they can't self-fund because they're not at that stage in their business cycle or business lifetime, they're not going to be able to access capital. And so I do think there'll be interesting consolidation opportunities that come up over the next 6 or 12 months. And so, as Humm, we are looking at those opportunities that will be accretive to us, either from a distribution perspective, a technology perspective, or even adjacent products. And so, we'll be very, very discerning if those opportunities do come available. But I think we are entering into an era where that's going to occur. I think the other piece is really just, I think the demand for the services that we provide is going to increase. I think there's going to be greater need for what we do, particularly over the next 12 to 24 months. And I think that's exciting, in terms of the number of customers that we can support over this period of time.
Fantastic. And I guess, as we wrap up, what can we expect from Humm Group in this next 12 months?
We want stability, I think, would be number one. We've got a very big focus on execution. There are a number of things that we set out at the half that we need to execute on. A continued focus on our core in bigger ticket finance, supporting growth of those products and services. And also, I think we'll be in a position to grow profitably through this period of time, and that's something that we're very passionate and we're very focused on in terms of the value that we want to deliver to shareholders over this period of time.
We get some amazing talent listening to this podcast. If somebody's listening and they're interested in what you've had to say about Humm Group and the vision that you've got, what would be the best way for them to find out about careers at Humm?
Yeah, so definitely on our website, our LinkedIn page also has all of our opportunities are listed on our LinkedIn page. So that's probably the best way.
We also get a lot of founders listening to this podcast who might be one of those types of businesses that could be a potential partnership, acquisition opportunity for Humm. What would be the best way for them to reach out if they're listening?
Yeah, definitely reach out to me directly. We've got a strong commercial team at Humm, but reach out to me directly, and we'll put you in touch with them. We're always looking at different partnership opportunities, and they can take many, many forms right now. So we're open.
Great. Well, Rebecca, it's great to have you finally on the show. It's been fantastic to talk about the journey with you. And look, good luck over this next 12 months on executing the plan.
Great. Thank you so much, Dexter.
And as always, you can connect with me, Dexter Cousins, on LinkedIn and Twitter. Thanks for joining us today. If you're new to the show, make sure to follow us and leave a review. It really does help me in finding great guests like Rebecca and promoting Aussie FinTech to a global audience. If you're coming back, thanks so much for your support. It really does mean a lot to me. Until the next episode, stay safe. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We help world-class fintech ventures hire world-class talent, and you can find us at tier1people.com.